Hello, trading is closed on November 10th, 2022. Probably a very historic day in the market. Let's do our disclaimer first, then go over our calls and make some predictions. It's my trading plan for Friday, November 11th, 2022. Just remember, I can be completely wrong. Any trade you make should be at your own risk. Well, for those with short memories, yesterday we dropped all day. I was looking for the pattern with the early low, which is this, and tomorrow should also have the early low. I said the commonest thing would be a gap and a prompt move outside the day's range. We certainly got that. We said this drop was right to support. We had a wave count, which said the decline was over, and if that were true, we should move up right from the open, and that happened, and we hit a target of 37.8771, and the market made short work of that. This is just a reminder of what we said. Gap, prompt move outside the range. Economic report makes a strong gap possible. Well, I always feel good when I cross some old MEJT targets off the list. We'll cross off 39.45.13 and 39.49.29. We still have 8 targets from earlier this year which haven't printed on the upside. I've never had more than 9 in the year, and that only happened once, and this will be the 21st year of the system. So I think some higher prices are coming. Doesn't mean they come tomorrow. These are my next targets to fill. But as far as tomorrow is concerned, MEJT doesn't believe this rally. Gives us a target of 39.1356. And unless we gap up smartly, which is certainly possible, but unless that happens, that's my call. Well, here's the pattern, 39.1356. This is actually a pretty bullish pattern. Low of day in the first 5 minutes, high of day in the last 5 minutes. It should lead to higher prices. Just remember, if it fails big time. And this target's over 40 handles south of where we are now. It takes a lot of energy to go through these numbers. This is all resistance. This is a prior FOMC price, a couple of MEJT targets. When you rally in a straight line to resistance, either you're going to gap up or that resistance is going to probably win in the short term at least. But longer term, it's a much more bullish picture. You'll recall this month we had an FOMC target of 38.4308. There tends to be the 3-leg whipsaw. That's the first leg. The leg number 2 ended last Wednesday, just under 3,700. And leg 3 should go beyond 38.43 by an amount more than we traded under it. So we have a minimum target on that system of just over 39.88, which is darn close to the MEJT target we've had since 2 months ago. So if we do continue higher, which is certainly possible, look for resistance in the high 39.80s. Now, I don't know how to count this, but we said yesterday it was possible that this wasn't the end of B, that this could be A, this could be B, and this could be C, ending around 41.80. That's one possible count. It doesn't break any rules if this is A and this is B. and that's C, right at the 0.618. It's not my favorite count. I really can't count this wave as complete. Just be aware that we have Fibonacci resistance, in addition to the other resistance from the MEJT targets and the FOMC announcement price. Now let's look at the longer term. What would happen if the count I had takes us up to 4180? How does that fit in with the longer picture? Well, we've had this target of 2977.91. Here's 4180. If that was A and B isn't where I had it, but rather at 4180, then C equals A right at the target. Sure would be nice if that worked. It all fits. We're going to pencil that in, a rally to 4180, drop to 2977.78. Doesn't make it right, but the fibs all work. It's a beautiful pattern, and no reason to change it as long as it's a valid count. Doesn't mean it'll stay valid, but gives you some kind of a plan, even if the plan has to change. I had personal business tonight. I haven't spent much time on this. If you're going to risk money, just remember I'm not playing with all my cards. Friday's pattern has the early low. It could still gap up. Typically it's a rally day with a high and a fine lower. If it's weak, more weakness should follow in subsequent days. There is a lower MEJT target. If we don't gap up smartly, the rules say it prints. Just remember, futures are already up, so it's entirely possible we do get that gap. Now, the trannies are rallied in a straight line to the declining 200-day moving average. It's very difficult to advance further under this condition, so that market segment at least should be near a short-term high. There's a MEJT sell signal described on page 120 of my book. The odds are strong we'll have a decline of some size at some time tomorrow, but the signal doesn't let us know where the decline starts and doesn't require a lower close. If we're going to get it, I prefer we get it right from the open, but I don't always get what I want. We've rallied in a straight line too, but not through resistance. If we're to continue higher unabated, we should gap over today's high on Friday. If we do, there's resistance in the high 3980s. Longer term, the wave count I'm using calls for a rally to 4180, and that will be followed by a collapse to 2977 to 78 over the next few months. We're in a pretty bullish period for the market. I think our drop has completed its leg, but the next leg up should go higher. That doesn't mean we have to go higher tomorrow. And if we don't gap up, I've got a significantly lower target. Pattern has the early low, and that's today's call.